Mag 7, the heavy hitters, predominantly all tech and predominantly all AI. So the market has narrowed quite a bit again.
Yeah. It's a hot market for a few stocks, but Nvidia today turned down quite a bit. Did you see that? Earlier this morning, Nvidia was kind of selling off 3-4% down at some point. And in the last month, the stock is down 9-10% and seems to be accelerating downward. But that's TBD. I mean, if you look at it in the last 6 months, it's still kind of flattish. Actually, it just turned negative in the last 6 months. Interesting.
Right. I mean, we were kind of talking about it yesterday. So now it's below its 50-day line, which is a key level for it. And this could actually, I mean, this is what happens, right? Nvidia was the market leader, and now it's starting to break down. And yeah, there's a few players like, Broadcom today is up big, and I think that's part of the reason why Nvidia is down. But you can't just have the broad market go up on the shoulders of just a few leaders, especially when the big leaders are kind of starting to crumble. I don't see any others that are really going to be coming in and taking the place here.
Yeah, I don't know. Yesterday Wes talked about how Apple's partnership with Broadcom doesn't really impact Nvidia that much. He mentioned that Apple and Nvidia have a long history of not getting along, and that nobody really expected Apple to be using Nvidia anyway. And Nvidia doesn't manufacture its chips, I guess Broadcom does. So I don't know if that's but for investors, it may have a different implication. Like I originally thought that maybe this is the dig on Nvidia, and the stock price action seems to be reflecting that. In the last 1 week, Nvidia is down more than 6%. Broadcom's up 20%. AMD also down 10%. So I mean, Broadcom was already a very cheap stock compared to Nvidia and AMD. Let's look at that real quick. AVGO, and I actually know a few investors that are heavily in this stock. It's like one of their top investments over the years. So $1 trillion market cap, PE ratio of 189. That is wild for Broadcom. Man, look at this. Look at that chart. That's crazy. Up 10x since COVID lows. Since October 2022, it is up 5x. That's just incredible.
I think a lot of people were kind of ignoring it. So that's why
Right.
it's way ahead on its current PE, but their forward multiples right now are pretty much around the same 44, 45. So that's why you're
Right.
seeing some sharp appreciation come into it.
Do you short it here, you think?
They just gave a very powerful guidance. I think they said their sales, they expect 65% uptick in the first quarter.
Mm-hmm. Of their AI revenue, right?
Right.
I don't know. Who knows? A wild market for sure. I might actually just short this. That's a hefty valuation.
Your short portfolio is getting massive.
Yeah, it is. I have like a couple dozen stocks now in there, a couple dozen securities, and yeah, and it's like wherever I look is valuations are high. Trying to find some long ones that I can't really find to hedge the market risk, but I don't think. I mean, look at these indices turning down today. In the last couple of days, they've been really weak. What's your recession probability estimate in the next 12 months?
I'm sorry, I was juggling between a post and this. I think we're going to see a recession coming in third quarter or so. And my probability on that is probably 70%. plus.
Yeah, I'm pretty. I would say it's more likely than not that there's going to be a recession starting soon, and it may already have started, to be honest with you. But give me like another couple weeks to confirm that.
Do you know what the Fed probability is for the next interest rate? Not the December one, but
Yeah,
next
it's like
year.
five. It's like next year. No, I don't
Right.
know the next week. Next year, let's see. So the Fed is meeting next Tuesday. Going to announce next Wednesday. Right now, 3% probability of a pause, 97% probability of a cut. By the end of next year, the interest rate is expected to be about 4%. So basically, the markets are pricing in one more cut after next week for the end of next year. I mean, that would be wild.
Yeah, I mean, and that's the reason why I was asking. I'm already starting to hear talks of a pause for the first time coming in. You know, was listening to a couple different economists today, and they were referring to it. So these are very early talks, but we're kind of going into it. So if we get stuck around here, that's not really a good thing for the market, because the market, if you recall, the market turned around earlier this year on the Fed cutting rates. That was the big thing. And even though the bonds actually snapped right back up, the market just continued its rally.
Right. Hold on one sec. Joseph,
What's your catalyst for a recession? I mean, I understand why you're short. I do on a technical basis, I get it, but what's your catalyst for being right on Tesla in particular?
I mean, there's a bunch of reasons why I think Tesla is overpriced. I think the automotive market overall is challenged with high interest rates still. I don't think the demand for vehicles across the industry, across the world is there. I think Tesla will fare better than others. Like, I think some automakers will go bankrupt in the next year, but I think Tesla won't. But if there's a recession, then all stocks get kind of sold off anyway. I think the Fed waited too long, too high to start cutting, and they're not. They're not. I don't think recognizing some of the risks especially in the lower tier consumers, lower income consumers. Credit card delinquencies are up, other delinquencies are up, inventories are rising across the board, and but on the other hand, the inflation is proven a bit more stickier than I had thought. So right now we have 3% PPI, CPI, PCE year over year, and it's expected to tick up next month. So I don't know if they can even cut rates, even if unemployment rate starts, resumes rising. So, I think stocks like Tesla right now is the last one you want to be in a recession. If there's a recession, stocks like Tesla, where your P/E ratio is like 200, um, and others like Palantir, MicroStrategy, Carvana, Rivian. Um, those are the last stocks you want to be in. I think Nvidia. So yeah.
I'll also add one more thing, Yaman, is the drop off in government spending that we're going to see. Okay.
Oh,
So
that's not going to happen right away, right?
I think it happens sooner than later, especially off the levels that we're coming off of right now. An alarming figure that I saw this morning was that the trailing 6 months.
They're not going to cut spending if there's a recession.
I think it goes on before the recession, and I think it's going to be part of the fact that leads us into the recession.
Well, I think the recession is starting already. Like, I
Correct.
think we're at I think looking back, December is going to be a month that was in a recession. And but that's not going to, like, in my opinion, I mean, obviously these are just guesses and estimates. I may be wrong, but I think December is going to be a month where, as you know, economic releases get revised downward, even quarters down the line. So we're just starting to see the weakness. Like, look at Nvidia, a stock that used to lead the entire market, that people had parties for earnings releases. People would travel across state lines for parties in New York City to watch on a big screen, like a freaking World Cup game. And look at the weakness in the stock in recent weeks. You know, so I think the leadership is declining. I do think Russell 2000 will outperform these Mac companies. I mean, look at Oracle down to in the last 1 week down 10%. Adobe down 17%. Microsoft, Apple flat. So Microsoft, Apple obviously have tens of millions of dollars of free cash flow, extreme amounts of cash on the balance sheet. Like, these are the companies that kind of like safe haven companies, right? Dell is down as well, and Wells Fargo is down. Like, I think in the last week, there's a bit of a shift. Coca-Cola up, Pepsi up. There's a bit of a shift towards safe haven stocks. Tesla is a kind of, obviously a highly manipulated and kind of a one-off on its own. But if you look at some of these like high-flying stocks, they're getting really weaker in the last week or so. So that's part of the reason I think we're kind of getting ready for a big pull down across these Mech 7 companies. But Tesla can't run for a while. I mean, like I said, it's a very heavily manipulated stock with call options, gamma squeezes and everything, with controlled rhetoric across social media. So you can't, who knows what it's going to do. But there's no question in my mind that Tesla stock today is overvalued.
Why do you think it's rallying today?
I mean, it's Friday. You got to make your cover your, the money market makers need to cover their exposure to options. So, people who play in options know these things. People who put in billions of dollars into these things, they can easily manipulate a company that is tightly owned by a few individuals, and the outstanding shares are just not that very many. So it is what it is, part of the game, I guess.
Just a quick question on that. So I saw a post on, China deploying AS now, and that may lead to some FSD revenue recognition. Do you know?
Okay. Oh, that's funny. Magic.
Hey, good morning. Just wanted just a few things. I think the most important thing is the Gary Gensler thing. I don't know if you guys discussed that. SEC is going to bring charges on Elon for the Twitter acquisition and maybe more.
Dude, Elon's the government now. What charge is going to stick, for crying out loud? Are you serious?
I'm just saying there's gonna be a Wells notice pretty soon. Regardless, it's very clear securities. If you look at the case, it's very. I'm just saying the reason I'm telling you is just that he is breaking securities laws. Whether he's going to be charged for it, I don't know. But I thought we were a country of laws and regulations. It seems like probably not for the oligarchs, but for the most. If you understand securities law,
you can't prove anything.
Your breach of securities law. This is like
you can't prove anything. He's been sued and tried many times, and he's always come up above. So, good luck. If your case is based on that, that's not going to change.
It's not based on that. That's just a kicker. It's based on the company's
trading at. Doesn't matter. Don't hate the player, hate the game. The man is great at playing the game. So, why are you being a hater?
I don't like people that break laws. Yeah, I mean,
you can't prove it. Where is it? Where does it say in the verdict that he broke the law?
Based on the evidence, based on there's already email trails of him talking about he submitted the wrong form. Okay, that's clear violation of what he was doing. Whether he's going to be tried for it or not doesn't matter. But I'm saying it was very clear cut. If you own 10% of a company, you have to file a certain form. He filed the wrong form. Whether it was on purpose, on accident, doesn't matter. But it was incorrect. Right? That's blatant. That's the open and shut objective violation.
Man, you're so into the whole like emotional aspect of this thing is crazy. It's kind of hindering you a little bit. That's all right. All right, Joseph. I remember our exchange from about a year ago about Uber stock. Do you think Uber in the last 5 days down 7%, in the last month down about 15-20%? Do you think it's because of Z13? Joseph, you're on mute. XAI?
Yeah, I've actually given a lot of thought to Uber's position, and I feel like they're very vulnerable right now, and Tesla could pretty easily put together their own rideshare package and compete.
So when do you think Tesla Robotaxi will start, XAI?
I don't know on that, but I think it'd be interesting if they did a rideshare platform before they had Robotaxi.
Yeah. Yeah, I don't think we'll see any of that stuff anytime soon. Maybe eventually. Joseph, are you there? Okay. Well, I see Just for Fun in the audience. If you could come up, I have a couple of questions for him. ACDC, do you think MicroStrategy is going to be added to the NASDAQ 100 index tonight at 8 p.m.?
I haven't really looked at that. I saw rumors of it, and I mean, why not, right? We're going by market cap here. So, I
Let me
mean,
ask. So, Just for Fun is, well, one reason that it wouldn't be ACDC. One possibility. I think it will be added, but one possibility is that it acts more like a bank, a financial institution, by kind of doing convertibles and buying Bitcoin as opposed to its software business, technology business. So Nasdaq doesn't have financial institutions. Okay, Just for Fun, you said I should cover MicroStrategy. Why do you say that?
I was requested to come up because things have really gone downhill if you're requesting me to speak. But so in terms of MicroStrategy, Bitcoin, we had discussed this maybe a week or two ago. I think I said at the time, I think MicroStrategy is, dangerous. It's sort of like a levered play, and maybe even Ponzi-esque. But a lot of it just depends on the price of Bitcoin. And I think, like I said previously, I think sort of in the next few months, certainly at least for the next month or next few months, I think there's above 50% chance that Bitcoin continues to rise, and so if Bitcoin continues to rise, then MicroStrategy may continue to rise even more.
Okay, so you believe that because Bitcoin price will go up, MicroStrategy price will go up as well. Okay. How high do you think it can go up? Oh, by the way, do you own MicroStrategy?
So I have like a very immaterial position. Actually, I have a.
So here's my question. If you're so confident that you're telling me to close my short position on MicroStrategy, that you're telling me, even though you haven't met me, you don't know my full financial picture, you don't know some of my potential return expectations, risk tolerances, and a bunch of other factors that you have to know to give someone financial advice, why are you so adamant about telling me to close my MicroStrategy short position, or Tesla short position for that matter?
Yeah, so first for MicroStrategy, I just think the risk reward, is not great at this time for a short position. Now, I guess there's a difference if it's like a put, that's probably less risky, but just given, like I think you probably followed Tom Lee from FundStrat. There's a lot of different players who have different predictions for Bitcoin, and I previously said, aside from those people, what they're saying, the reasons I think there's multiple different factors that may lead to Bitcoin price rising over the next, call it 3 to 6 months. And so if, say, Bitcoin rises, it could be anywhere between 10 and 100% over the next 6 months. If that happens, if MicroStrategy is a levered play, then someone with like a naked short position on MicroStrategy could get pretty blown out. So I think that's why it's not like I don't know your position. I don't know you don't state the exact nature of your short positions. It's just in terms of like risk reward. I feel like compared to like shorting GM, I feel like MicroStrategy is just much more dangerous because Bitcoin is very volatile, and I think the sort of dynamics, again, I am more bullish than not on Bitcoin over the next few months. And so given the volatile levered nature of MicroStrategy, I think it's dangerous short.
Okay. Do you think they're going to get added to NASDAQ 100? And if so, what do you think will be the price action?
Yeah, I haven't followed it that much. I don't have like a strong opinion on it. I mean, I think it sounds like they probably meet most of the metrics, so decent chance, but maybe it'll rise. I wouldn't expect it to be on the same level as like when Tesla or Palantir got added to the S&P. Definitely smaller impact than that.
Yeah. And you also, actually, just hold on for 1 second. You also asked me to short and close my short position on Tesla. I'm guessing that's because of similar reasons, plus some fundamental reasons around FSD, Optimus. Anything else that I may not have heard about?
Yeah, I mean, with Tesla, it's much more, one, fundamentals, and then, two, I think there's sort of a lot of technical indicators right now. I'm not like a technical expert, but I follow some people that, know much more about it than I do. Just I think there's like technical indicators that indicate the price may keep going up, and it's
Okay.
Yeah.
Now, your third piece of advice to me was that I should apologize to Omar. Why is that?
Yeah, so I only know kind of what's based on the tweets that I've seen, and I know that you've sort of been saying that a lot of people left and whatnot because of the short positions that you've had, and that there's sort of this cabal or whatever, this thing about the Tesla longs. But I think you can correct me if I'm wrong. The day before you announced your short positions, you had this interaction with Omar on Twitter where he kind of gave some feedback about like trying to sort of stop driving people to do
Well,
the
he's been giving that feedback for a long time in DMs, in personal phone conversations. And so why is this time different, except the fact that I've taken a much more bearish position on Tesla as the stock price rose, and then eventually end up shorting it. That was the one where that led to most of my patrons and 2 of my subscribers canceling their support. So clearly, it is a short position. It is not some sort of advice that he's been given for months. And further, in the exchange that you're talking about, he said, well, I've been asked to speak in other spaces. And I said, okay, go ahead and speak on the spaces then. Why am I supposed to be apologizing for that? Go ahead.
Yeah. So again, like I don't know all the any of the private.
Well, I just gave you the rundown, so now you do know.
Yeah. So I mean, it's I can't read into his mind or whatever, but I think obviously he invested a lot of time in this space, and he has a very large following and so on. So I think
What are you talking about? There's like 3 other spaces he participates in that gets 10 times more listeners. So I don't understand what the big deal is. You still have your spaces to control the audience. What do you want?
you're asking him.
I'm asking you. All right. Let's say
Yeah. Independent third party. I don't have anything to do with what was going on there, but I did have some thoughts on MicroStrategy because I have owned it in the past. I got burned pretty hard. And I'll tell you, Michael Saylor does not care about the stockholders of MicroStrategy. He is 100% about Bitcoin. So advancing Bitcoin, which is fine, whatever. Just as a shareholder, you should know that. And then,
well,
secondly,
I'm not a shareholder in MicroStrategy.
no,
I'm
I know
shorting this
you're
stuff.
short. But I think it's important to recognize that there are currently alternatives to Bitcoin, and there will be more alternatives to Bitcoin. There just will be. And you may not like it, you may disagree, you can fight all you want. Do that. I encourage you. But there are alternatives and there will be more. So just keep that in mind as you progress down the Bitcoin path. So those are my 2 thoughts about MicroStrategy and Bitcoin.
Do you have a position in any of them, long or short?
I own Bitcoin.
Mhm.
And I no longer own MicroStrategy. It was too painful. I had to sell it. But
How long did you hold MicroStrategy?
I owned it for 2 months, and it happened to be the period of time it crashed hard along with Tesla.
Yeah.
So I got double hit. I had to sell one of them. So I sold the MicroStrategy. Yeah, that was unfortunate. But I did want to mention though, just to double on your comment that you raised about he doesn't know your personal history, doesn't know your investment goals or whatever. And Peter Schiff, who's a gold bug, he was in one of these spaces on X, it was Twitter then. And he said, sell it all. I don't care. It's worthless, blah, 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 sell. And he couldn't have been any more wrong, first of all. He was completely wrong. And what happened is he told all these people to sell without what you said. He knew nothing about their investment goals. He knew nothing about what their current situation was. And he was giving them straight up investment advice. And it was to sell Bitcoin. And if anyone sold, it was his fault. So that's all I had to say.
Okay. ACDC?
Just a couple of things. First of all, I don't know how you can. I don't even remember him or what he said and when he said it. But if a person gives their fundamental opinion on something and the market carries it to some other extremes on the opposite side, I don't know if you could really blame him, right? And blaming is what right now. What happens 2 years from now, 3 years from now, when maybe his decision was right or his recommendation was right? I do agree with that. That I mean, if he's giving his opinion, it's different. But making a blanket statement and telling everybody to sell it, that's kind of wrong, because like Yaman says, you need to know the complete financial picture of an individual. So that's a different piece of it. But on Bitcoin, I just wanted to share a quick conversation that I had with a buddy of mine, Yaman, this morning. So this buddy of mine, he's in Dubai. He's with just changed over to a startup fintech out there. He's an ex-Visa guy. Before that, Standard Chartered Bank and stuff. So all over the world, high-level executive, starting up his fintech. So we're just talking about all of this, and he was giving me the picture of Dubai and Bitcoin because they love it out there. But the reason why they love it out there, it's because it's a money laundering instrument. They're ready to take 10%, 20% hit on their money. In fact, they go into it with that understanding, but it gives them a chance to launder that money and to move that money. Okay, so and as a fintech, this is him. He's like, yeah, you know what? The way we look at it, there's value maybe to the transaction or maybe the technology, but there's no value to the coin. And I think this is something a lot of people miss out here. They get into the hype, and of course, they see it being the trend,
But I don't think
hitting new highs.
I don't think Bitcoin people are claiming there's value to, like, there's underlying value to this thing either. Like, I think everyone is on the same page about this being, worth whatever the next person will pay. Which I guess you can say about even stocks and bonds and real estate. You can justify some of them with cash flows, underlying cash flows. But at the end of the day, these secondary markets are always about what the next person is going to pay. Even when it comes to Dogecoin.
Correct, but that conversation has changed a lot. That's not what it was 3 years ago, 5 years ago, right?
Yeah, exactly.
There was an explanation of what Bitcoin, the purpose of Bitcoin, what it'll serve. And now that conversation has completely changed that, it's just an asset class, and it should have a value compared to anything else, so it's changed quite a bit.
Yeah, exactly. Yeah. It's now a store. They presented a store of value. Like, everything can be a store of value. So, I don't know. Anyway, let's see. Anything on Carvana? I'm actually looking into this one a little closer.
I'd
than
like to
others.
talk on Carvana a little bit.
Yeah, go ahead.
So I happened to be very long Carvana at one point when it was at $9.
Mhm.
And I was early, like I am with everything. It went to $4. So
Mhm.
at 7, I sold it.
Mm.
But I had 3,000 shares of it. I was,
Oh, wow.
yeah, I was deep in it. And I was putting in a swimming pool at the time. And it wasn't just a swimming pool, it was an experience. So yeah, that was a mistake I made. But anyways, I got the inside details. So it was there was a short bear run on it. And they ran some articles about it, which may have been correct. But I think I was in it because it was a disruptor and it borrowed a lot of money when money was very cheap. And I figured, well, they can probably just figure it out. They have enough money, they can adjust their model, they can make money. But what kept ringing loud about it is on every car they sold, they lost money. And I don't know where they're at with it now because I dropped it and I just left it in the rearview mirror. But I think short covering was a big part of the recent run in it. And so I think you might be onto something with the short. Like, it's definitely going to come in a little bit.
Well, this one is a little different than the other ones. This one has a couple of investors that are long-term investors that are very successful in their long-term track records, like T. Rowe Price and Fidelity. And so that's why I'm like, maybe I'm missing something here. But I just, the more I think about it, the more I'm like, this valuation doesn't make any sense for this company. And people talk about operational improvements since they kind of avoided bankruptcy, but it's not reflecting the bottom line, that's for sure. So yeah, maybe we can look into this a little deeper if you guys don't mind. I don't really care about regurgitating the same conversation over again on Tesla and other companies. XAI?
I think you're on the money. I think they have inventory that they bought up during the pandemic that was overpriced. And the demand is slowing for everything. I think you're onto it. I think you've got a winner here. And I would never short a stock on purpose. So I think maybe you've done a lot of homework on this and you're gonna get a nice reward.
Okay. But that's exactly what you said just a second ago.
Iman, when you say that there's a couple big investors in there with T. Rowe Price and Fidelity,
Mhm.
I mean, those are just their fund holdings, so those aren't
Right.
any direct investments. So
Right.
that could be, T. Rowe Price having a small cap aggressive growth fund where the guy has bought it, because Vanguard is right behind them. To me, actually, what's more interesting is these look like hedge funds, probably, like CAS Investment Partners and Green Oaks.
Mm-hmm.
They've got both about 5% into it.
Mm-hmm. Well, let's look at the T. Rowe Price fund. That's really one that kind of pulls my attention quite a bit because, like, as a company overall, they're very successful. All of their funds are. I mean, some of them are more successful than others, obviously, but T. Rowe Price has it. Like that was our primary competitor when I was at Delaware Investments. So, and I used to do competitive research, so I know these companies pretty well. And but you're right. Let's look at the exact. That was my next step too. Let's look at the exact fund that holds it, exact team that holds it. Holders. And they own 11% of the outstanding shares. So $3.4 billion. It's like, and then number 2 is Fidelity, $3.0 billion. So together they own 21% of it. That's incredible. That's huge. While T. Rowe Blue Chip Growth Fund, ACDC. Blue Chip Growth Fund owns 1.2 billion. And then T. Rowe Blue Chip Growth Trust owns 300 million. All Cap Opportunities Fund. So they have a number of funds that own it. So these teams share research among themselves. And I don't see a short cap, a small cap. And obviously this is a large cap company. So at this point, $51 billion market cap. No earnings to speak of, no cash flows to speak of, but you have these incredible funds that are on their side. The next step would be to look at when they bought it, and then kind of go from there. In the meantime, XAI, go ahead.
Yeah, no, when I worked at Ameriprise, what I saw was a lot of times when there was a large number of shares held by a client, Ameriprise would show up as the holder. And I don't know. I don't know if that's the case here. It sounds like
No,
you've
this
done
is different. This is different. These T. Rowe Price and most Fidelity funds, they're buy side managers. They're not just financial advisors like you see Ross Gerber and stuff. Those are more and let me see.
They're primary asset managers.
Right.
So Fidelity does have an advisor group, but that would be much smaller compared to their actual asset management. So these share counts that are showing up are through their funds, basically. And T. Rowe Price is those funds that you just listed. I mean, to me, that doesn't inspire much confidence because, if you're classifying Carvana into the
come on, T. Rowe
blue chip,
Price, yeah, like these are concentrated, focused funds, man.
Right, exactly. A concentrated blue chip focus fund, right? I don't know. These guys are chasing probably just like market cap and replicating certain indices and maybe some performance metrics.
No. Focused fund means they don't have hundreds of securities in the fund. I can't find the exact So let's see. The biggest holder here is Blue Chip Growth Fund. Okay, so let's pull it up. Tiro Blue Chip Growth Fund. Let's do some digging here. Portfolio number 1, Nvidia 13%, Microsoft 12%, Apple 9%. Carvana 2.5% of the. I have forwards here. Let's bring them up. Carvana is 2.5% of their holdings. That's huge. 10 holdings represent 65% of total net assets. This is not an index fund like the one we discussed yesterday. All right. These guys are making concentrated bets, and one of those bets is Carvana. And when T. Rowe Price makes a bet, you better listen. You better sit back and at least like check your math 2 times, 3 times if you're betting against them. All right. So the manager is Paul Green II. Joined T. Rowe Price in 2006. That's the other thing about these guys is that they hold on to their teams for a long time. Like they're true long-term investors. You know. Managed the fund since 2021, October 2021. So that's relatively new. Okay, joined T. Rowe Price, but managed the fund since 2021. Interesting. 97% concentration in US. Man, I'm betting against both Nvidia, which is their top holder. This is fucking nuts. This is crazy that these guys are the best in the world. Okay, and I'm betting against their top holding and also one of their other top 10 holdings. Crazy. And Tesla is one of the top 10 holdings too. So 3 of their holdings I'm short. That's fucking nuts.
If you can dig into their holdings, you will see that these haven't got to be large holdings because they've been buying more recently. More than likely, I mean, they're of course increasing their share as they're getting inflows, right? But I don't think they're allocating any extra money into it. This has become this much only because of the appreciation of these stocks, really.
Well, you know, they're actively deciding against not shaving off. So that's a decision. So let's look at their full downloads here, the full holdings here. Okay, let's dig a little deeper. All right. I'm gonna do some more research here, but they own $8 billion of Nvidia. That's fucking wild.
It's very hard to get their activity. It's somewhere in their
You have to
quarterly
go. Yeah, exactly.
reports and stuff.
Exactly. So Carvana is 2%. They own $1.3 billion, and Carvana went up. I mean, if you're right, If you're right, I mean, we can look at their. I mean, this is the work I'm going to do tonight or something, or this weekend, and kind of look at their purchases over time. But I suspect that you're right to some extent. But it is also true that the fact that they're not shaving off, this means continued confidence in the stock. So let's see. Number 1 holding Nvidia, then Microsoft, Apple, Amazon, Meta, Alphabet, Eli Lilly, Visa, MasterCard, ServiceNow, Carvana, Tesla. Carvana 2%, Tesla 2%. Okay. And then they have United Health Group, or they had. That's interesting. Oatley, Chubb, Bookings, Synopsys, ASML. They have ASML as well. So they're big on these chip theme. They have Broadcom. How about that? AMD, TSMC. Yeah, they're really big on this chip thing. And then there's like a zillion other. So this is really interesting. So 1% or less, they have 1% or less, they have 63 holdings, and then they have 17 holdings where it's 1% or more. Okay. And the top 5 holdings comprise half of the company. That's half of the holding, that half of the fund. That's wild. That's a heavy concentration. That's a heavy concentration. Wow. This is crazy.
And
What's their turnover?
if you look at the sector weightings also, it's about 45% technology and another 17% communication services, which overlaps a lot of technology. I wouldn't be surprised if like a Broadcom actually shows under communication services.
Right. By the way, these holding percentage are monthly, so that's as of November 30, so it's very recent. Okay, it's not September 30th. Oh shit! Look at this. Interesting. Morningstar ratings. You ready? Overall, 3 stars. 5-year, 2 stars. Damn. This guy's gonna fire soon. Especially if I'm right on Carvana and Nvidia and Tesla, and he keeps holding on to them, this guy's gonna get fired next year. I guarantee it. Let's see. Alpha. Listen to this. Alpha negative 3.85%. That is fucking nuts. Active share 53, R squared 0.82, standard deviation 22. Annual turnover. This is the one I was looking for. 12%, which means their average holding is about 9-10 years. That's crazy. That is a focus. This is what I'm talking about. This is T. Rowe Price right here. The guy just hasn't had a big luck in the last year or two here. Their Morningstar ratings are hurting. This is wild. Gross expense ratio 0.7. Net expense 0.7. Expense waiver NA, expense limitation NA, transaction fee none. Minimums to open account 2,500. This is a mutual fund. They have. I'm sure he has separate accounts too. Yeah, this is crazy. This is so wild. I would have never guessed myself betting against T. Rowe Price ever in my life before. I mean, they played a major, like, I wouldn't say major, but one of the reasons I invested in Tesla is because T. Rowe Price was an investor as well. Fidelity was an investor. Like some of these rhetoric that I was reading on Seeking Alpha back in 2016, 17, just didn't match with what I was the kind of investor base. Because like these guys are very long term, very good investors, global investors, but looks like they're coming to a bit of a snafu here. 2022, they had 38.6% negative return. That's wild. That's crazy volatile. That's why they're, let's see, 3-year, 5-year is 2 stars, 3 years 3 stars, and that 2022 is going to stick with them for another couple of years. So, yeah, interesting. XAI?
Yeah, I'm just looking through the filings for this company, and the whenever I look at a company, I see these Form 4s, which are issuance of stock. When the majority of the filings are issuance of stock and then Form 144 sales, I start to ask questions. So I looked up this guy, this Ernest Garcia. It says he's a felon, bank fraud felon, and he is of 51 million shares of this company. I don't know. I would start asking more questions.
Yeah, I mean, everyone knows that part. That's public information, obviously, right? They had a recapitalization and kind of saved the company from bankruptcy. They have a sister company that are doing, I think, all the backhand stuff, which is where dealerships make their money. I used to actually have a couple of dealerships as my client when I was an investment banker, so I got to see their financial statements at a very deep level. And that's where they make their money. They make their money on service. They don't make in new car sales. They make a bit of money on used car sales, which Carvana is. I guess they maybe their gross profit per unit is pretty high, but I think that maybe because of some accounting reclassification issues. Because if you look at operating income, net income, it's not very high. It's actually zero. So hold on, let me just look at this blue chip fund a bit more. So I did, by the way, it aligns, right? So you look at their 5-year return, 2-star, Morningstar out of 5, which is horrible. You don't see that many 2-star funds at companies like T. Rowe Price, Fidelity, or Delaware Investments. And you look at when this guy came in, 2021. So probably he replaced a manager that was underperforming for whatever reason. And so he's relatively new at this fund, even though he's been at T. Rowe since 2006. It's really interesting to have Nvidia as their top holding still. That I would love to have this guy in this space and go ahead like one-on-one, go at it on Nvidia. But they know technology. They obviously know technology. They actually do some like early stage, kind of like private equity type of investing as well. T. Rowe does. Let's see. What else can I see here? Alpha, oh my gosh, alpha negative 3.85%. That is wild. Um, let's pull up sometimes their reports have some like a write-ups. Let's pull that up real quick. Semi-annual. No, they don't have that one on there. It's just one page. Let's get summary prospectus. So they have I class, advisor class, R class, and Z class, and investor class. Okay. Okay. They have a fee waiver expense reimbursement for the Z class. Interesting.
Those are just different share classes and have a different
Right.
fee structure
Right.
for institutional clients, retail clients, and also depending on what kind of retail account holding it is.
Right.
But here's something that's really interesting is that T. Rowe Price actually has a global technology fund
Mhm.
and a science and technology fund too. So I'm just pulling that up, and it would be weird not to find Carvana up there, right?
I don't know. Yeah, interesting. Let's see. Let me just see for a second. Give me one sec. I class requires 500,000 minimum initial investment. Z class is only available to funds managed by T. Rowe Price. Okay. That's why they have it. Okay, tax information. I'm trying to find some write-ups on these stocks, but I don't see it so far. Let's look at the annual report. This annual report, December 31, 2023. They might have something on Carvana here. Let's see. They have it classified under specialty retail. Okay. Consumer discretionary specialty retail. Okay. They have corporate bonds as well, just a little bit of Carvana. and no write-up. Come on. When I worked at Dollar, I used to get these write-ups on each stock, sent by the portfolio manager of the best fund in the world in 10-year returns, value fund. I was like, wow, this is wild.
So yeah, man.
Yeah.
What I'll say is this. Okay, so if you want to go by, like, if you're trying to like see why they're doing this, or when they did this and stuff, going by the blue chip fund is not going to tell you anything. Okay, these guys, as much as they are active fund managers, they're really more passive in nature. Okay, so all of these holdings, and I bet when we dig in deeper, you'll see it isn't because they bought more. These are just because of the markets. These just appreciated to
But why not
become their
sell
top
it?
10 holdings.
Why not sell it though? Why
Oh,
not
they
trade?
they will not. Like I said, they are very passive, and especially when the market's working in their favor, they're always behind that decision. Okay, they'll end up selling it literally when the market's already backed down, and that's why a lot of these fund managers, they can't even beat the S&P.
Look at this. But I mean, I agree with you in most cases, but in this case, they have 5 stocks comprising the majority of the holdings, 10 stocks comprise of most of the holdings. So I think this is a very focused fund. But here's one fact that's interesting. Okay, as of December 31, 2023, in the annual report, Carvana is not in the top 25. So that goes to the point that you introduced, and I agreed that Carvana is probably in the portfolio because of the price appreciation, and it was a very small. So that there you go. That proves your hypothesis right there.
And that's why I asked you if this
And
is like
Nvidia is number 5.
right, exactly. So and that's why what I was asking was, is this owned through a small cap tech fund or something? The
No.
only time I would give any fund manager or an asset management company any credence to buying, a stock, okay, and knowing what they're doing, is when it's actually a small focused fund. Okay, so I just pulled up their fund. It's called the Communications and Technology Fund, right?
Mm-hmm.
Much more focused on that, much smaller fund. Okay, the one manager and this manager will probably be someone who's more technology oriented. And if you look at this fund's holdings, okay, the top holding is actually Netflix. Second
Mm-hmm.
is Meta. The sixth
Mm-hmm.
holding is actually Nvidia. And before Nvidia, it's actually Alphabet, including even T-Mobile and Amazon in there.
Right.
So this is the guy who actually is buying technology stocks on the basis of research, while these others are just being reflected as the top holders just because they held it for a long time and it's just appreciated to those values.
Yeah, exactly. Okay, let's find the Fidelity one now. Fidelity Blue Chip Growth Fund. So Blue Chip Growth Fund for here we just looked at is number 1. And then 2 is Vanguard Total Stock Market Index Fund, so it's totally index fund. 3 is Fidelity Blue Chip that we're going to check into in a second. 4th, Vanguard Extended Market Index Fund. Fidelity Advisor Growth Opportunities Fund. So there's 2 Fidelity funds. Vanguard Small Cap Index Fund, that's an index fund. That's weird that they still have this stock in a small cap index fund. They must have some sort of rules based transfer from a small to mid to large cap, which hasn't met, I guess, yet. Blue Chip Growth Trust, which is probably the same manager, and then All Cap Opportunities Fund. That's a small one. All right. Yeah, this is so crazy. This is so wild. Paul Green II. I wonder what else he manages. Ratings, risks. All right, let's look at the fidelity. Proxy volume, quarterly fact sheet, quarterly year-end tax mention, etc. Okay. Fidelity Blue Chip Growth Fund.
By the way, the T. Rowe Price Communications and Technology Fund,
Yeah.
it does not own Carvana.
Oh, okay. Cool. I mean, they have it as specialty retail, classified specialty retail, so it's not considered a technology stock anyway. Let's see. Fidelity, Blue Chip Growth, monthly fact sheets. 5 stars. Okay, Morningstar. Expenses are low. Expense ratio 0.47. Okay, this must have a large. I'm guessing this is a large. Just hold on, let's see. Man, look at this track record. 10 years, 3%, 3 percentile in 10 years, 3 percentile in 5 years, 34 percentile in 3 years, 11 percentile in 1 year out of 1,000 funds. That is wild. This is some great record. Number 1, Nvidia, Apple, Amazon, Microsoft, Alphabet, Meta, Marvell, Eli Lilly. Man, what's up with Eli Lilly showing up in both of these funds? Netflix and Snap. 10 holdings comprise 62%. This is very similar to the T. Rowe Price portfolio. Very similar top 10 holdings and very similar concentration. But this fund owns 414 holdings as of October 31 out of 339 issuers. Interesting. Very, very similar large cap growth. R squared 96. This is more of an index fund than the other one, even despite very similar top 10 holdings here.
I'll tell you one thing that their top
Yeah.
10 holdings tells me, though,
Yeah.
is that 1.5% is Snapchat. That's not based
Right.
off index. So that actually is a decision that somebody in there went in and bought a lot of Snapchat and believes in it.
Yeah. Sharp ratio is 0.22 as of November 30th. Standard deviation of 24.57. Beta 1.16. Portfolio manager Sonu Kalra since 2009. So there's no recent portfolio manager turnover here. So something went wrong with that T. Rowe fund in the last couple of years that they had to change the manager. All right, objective 6, growth of capital over longer term. Strategy, normally investing at least 80% of assets in blue chip companies. Companies that in Fidelity's view are well-known, well-established, and well-capitalized, which generally have large or medium market capitalizations. Okay. Normally invested primarily in common stocks. Okay. This is just normal stuff. That's all there is on this. So let me see. Get out of this.
So they own 0.86% in Carvana.
Point what? 86%? Really?
Correct.
That's it?
Right.
Okay.
That's it. And the reason why it reflects as such a big holding is because Fidelity is huge as an asset manager, right? I mean, they handle, they're like probably the number one in terms of 401k assets. And when you have only 10 funds to choose from, and this is your large cap growth fund, that's where all the assets end up going.
Yeah. Yeah, you're right. Okay. So we cleared both of those. One of them is just, I mean, both of them kind of started small. One of them held on to it, but the one that held on to it doesn't have a good track record despite the T. Rowe name. And I'm guessing they're going to unload soon anyway. So let's see. If you go into Carvana's holders directly, I've heard there's a couple of hedge funds, but I don't really know much about them though. I remember D.E. Shaw, Green Oaks, but these are September 30th figures. Yeah, very interesting. Let's see.
And these could also be initial holders of it too, that have just held on to it right
well,
from
hedge funds have
IPO.
higher turnover, so that's less of an issue for them. But let me just check one more thing here. Yeah. Well, I mean, yeah, it looks like we have a pretty good idea here, man. I think this might be a good short idea, especially for those of you who want to hedge market risk. Like, let's say you're invested in Tesla, but maybe you're getting a bit more concerned about a recession risk. That I believe there's going to be a recession soon, but this might be a good one to hedge. Not only because it's got high P ratio, it's like 26,000 whatever, but also because it's run up so much. The investor base doesn't appear to be extremely knowledgeable. Mostly, index funds, a bunch of hedge funds, and but also the business. In a recession, one of the last things people want to do is buy a car. So I already see some indication that there's a bit less interest in them, but that's more circumstantial evidence. So yeah. Anyway, any other thoughts on Carvana? XAI, what do you think?
Hey, I'm with you. No, I don't have anything to contribute. I think you're on the right track.
Okay. I'll keep researching the company, see what else. Maybe I'll even call the managers. See what they think. Tesla is up 3.5%, $433 per share. All-time highs at $434 reached a few minutes ago. Let's look at the overall stock market. Tesla and Broadcom are carrying the indices right now. Most everything else is down. Healthcare is in the green just a little bit. Meta down 2%. All right. Anything else we got to discuss today? It's a Friday. Happy Friday, everybody. Thank God it's Friday. Anything else we want to discuss? ACDC?
I did send a message to about Tesla on a question that I had. He shared a post with the recent breakout of the software updates, and it's kind of like, because I'm stuck on that software update, so I'm in that group where I'm on 12.5.6.4, which is about the only group that hasn't got the holiday update. And the holiday update, I think, has gone to about 70-80% of the total fleet by now. So just wanted to kind of get his take, but I was extrapolating from that. I don't know if he's replied to me yet. I'll just quickly check that if 5% of the fleet is on this 5.6.4, that means this is the fleet that actually owns FSD on AI4, which seems like a very small number. I thought this number would be much higher of AI4 owners actually owning FSD versus subscribing, because subscribers are different. Subscribers are not on this branch. So it's kind of like just reading into those numbers a little bit and try to get his input on it. But
Okay. Yeah, I mean, I'm actually looking to add more to my Tesla shorts. Baby steps as the stock rises, and still haven't really pulled the trigger on 10x increase in the short position, but it's a possibility. I mean, honestly, part of this position for me is a little personal too, in the sense that I want to be able to, see both sides of the trade, long or short, long term, short term, and not really get caught up in the emotions of the community or the management or the story. So I'm kind of just dipping my toes in it, but it's a bit more like it's a bit more personal. But I also do think the stock is overvalued. So I do think that the fair value of the company is $200 per share today, given the risks in executing for robotaxis and Optimus, and also the recession risk that's rising. So it's not completely based, it's not complete personal, but there's a bit of a personal aspect to it too.
can I ask you a couple of questions on that?
Yeah.
So, I mean, I've been coming to these spaces since about March or so, and you were extremely bullish at that time. In fact, you were too bullish for my in my personal mind, and I found I would actually get away from the call a few times. Like I would literally have to okay, I need to stop listening to this because I'm losing rationality myself into it, right? Because the only dialogue that was there was everything bullish, bullish, bullish about Tesla. So for you, it's a complete kind of a 180 on this, right? Was there anything specific that kind of changed this mindset, or was it just a bunch of things, a few different things? Like what? It has to be something big, right, to go from this to the complete opposite. So can you share that?
Yeah. I mean, I've shared this before, but I don't think you were here. But so the number one thing is I was wrong on macroeconomics. That is by far the number one reason that I was wrong. Because when interest rates are high, I did think inflation was going to be transitory. But then after that, what happened was Russia went into Ukraine. You started getting these, supply shocks across the world, and then it kind of evolved into, you have this extremely low unemployment rate and wage inflation working itself into, and it's just really hard to get out of it. So I used to completely ignore macroeconomics. Like it would be more of a hobby as opposed to my investment process. Today, it's part of my investment process, and that's why I created this macro analyst account. That's the co-host right now. So that's also me, and I created in January 2024, and I invested most of 2023 and all of 2024 into understanding macroeconomics at a deeper level. And I'm an econ major, and I grew up in Turkey, where macroeconomics is very, front and center every single day. So it's not like I was starting from zero, but it was not part of my investment process. So I wasn't really making like these coffee bets the way I do with Tesla, etc. So I spent a lot of time in the last 2 years trying to learn macroeconomics, and I may still be wrong. Right, I can definitely be wrong because macro is very difficult to know, understand. It's way harder than microeconomics, in my opinion, because macroeconomics has a lot of factors that kind of intertwine and they affect each other. So it's really hard to like track. You can't focus on one metric. You have to focus on all the overall picture. And it's also really difficult to do controlled studies of macroeconomics because you can't change one factor and run the history again. And on top of that, you don't have much of a history. So when I see these like comparisons, oh, this is what happened in 1995, this is what happened in 1970, you're only talking about a handful of data points, you know? So that's not really a scientific part of it either. So it's very difficult to understand. I've spent a lot of time. So that's one reason. I did not see interest rates rising so much. I do not see inflation being so sticky, and therefore, with high interest rates persisting for years, that hits your discount rate, that hits your demand for your vehicles, and your ASPs and profit margins. So, like literally everything when it comes to Tesla. And so that's by far number one. Number two, on FSD and robotaxis, I was expecting FSD progress to be analogous um, to AlphaGo. I mean, I'm sure everybody has seen the AlphaGo documentary. If you haven't, I highly recommend it on YouTube. And this is, DeepMind creating, the AlphaGo and beating the top, players in the world and everything. That story and how fast that played out. I was kind of like on the train of this. Robotaxis are going to play out the same. FSD is going to play out the same. And you have also management that you're looking up to telling you that it's going to happen in 2020 or 17, 18, 19, 2020, etc. So, I was placing a bit more importance than what I did today on management statements at the time. But that's obviously on my shoulder. Like that's an investor needs to be skeptical about everything. And so, and then I also learned that improving the performance of an AI model is very difficult, and it gets even harder as you get better. And with robotaxis, with the 2-ton death machines they are, I think you're going to need orders of magnitude more training compute than you do today, like several orders of magnitude of training compute that you need today. And so I've been kind of testing that understanding with V12, V13, and like my expectations have been a lot more in line with the reality panning out than back in 2019, 2020, 2021. So also in 2022, I started kind of doing these like coffee bets and everything to kind of just keep progress. And in 2022, I lost most of the coffee bets and also 2023. And in 2024, I won most of the coffee bets. So I think like those are the kind of top reasons why I have a lot more skeptical, a lot more, you know, I think grounded, more informed approach to this. I can't still be wrong, right? This doesn't mean that Optimus is going to play the same, progress path as FSD did. Maybe Optimus, there are reasons why Optimus should accelerate faster than FSD. So I can still be wrong. But if you asked me in 2022, would I say I can still be wrong? I think I would have probably had a bit more overconfident answer to your question as opposed to today. So I don't know. I guess time will tell. XAI.
Yeah, thanks for sharing that. That's you have a wonderful perspective of yourself. Um, I did want to just get into AI a little bit. Is the next time you have Wes on, I want to ask him, when does he see like AGI and when does he see singularity coming? Because for me, and in the books I've read, which are many, it's a long time away. Like it's a very difficult thing to achieve.
Yeah, I'll tell you what he would say. First of all, he would say, what is your definition of AGI? Everybody has a different definition of AGI, and that I think relates to different timelines. Some people claim that we already achieved AGI. And some people claim we'll achieve it soon, but it's going to be less material than people think. And then some people have other words for the type of AGI, like super intelligence, that we don't even understand at all. Like it'll just kind of, act beyond us. Kind of like way better at everything than all of us combined. We're not there yet, and I think that's a few years out. I don't think that's part of the investment world today, and I don't think Wes expects that today either. But Wes and I, agree on some things, but disagree on some things. But for example, he's a Nvidia investor, and he believes Nvidia stock will continue higher. Tiro, we just talked about the Tiro price manager, who still has Nvidia as his top holding. So there's some, big investors in Nvidia, but we discussed for various reasons why we discuss here in this space over the last year. I think Nvidia is going to see some competition challenges here. Anyway, ACDC, any thoughts?
No, I really appreciate you sharing that, and I just have one follow up to that. So you have also, because I work a lot with investor psychology also, because handling your own investments, it's not so much about financial knowledge as it is about emotional decisions. And most investors end up going wrong with the emotional decisions, right? So I'm always focused on that. And that's like my value as an advisor. It literally ends up being more on the emotional part than the financial part. People think it's all financial, but it's not, right? So when I try to understand different investor psychology, one of the most puzzling things to me has been, as I bought a Tesla, like last year, that's when I got more into it and stuff. And before that, I never invested in the Tesla stock, okay, because it was just outside of my parameters for on the risk profile and everything. But once I started understanding the technology, I started looking at it a little bit more, and I started attending the space, started following you and everything. But I've never seen any other stock or any people attached to a stock in such a manner, right? Apple comes out with software updates, but people don't go talk about like, hey, did you see this 18.1 software update or software 9 or something, 19? They just don't, right? And Tesla, because it kind of has that wow factor as a product, people just get so attached to everything about it, including the stock itself, and they relate the product to exactly like to the stock, and they miss out on the entire valuations and everything, right? I mean, and you've had all of these people in that, in your, Tesla Live and everything. So how do you see that? Like, do you see many people be able to detach themselves, that, hey, I love the product, I love what it's doing for me, I hope I get V13, I hope it's able to drive itself soon, but the stock could be overvalued, right? Like, I don't see hardly any. In fact, I've seen more people not just buy Tesla stock, but there's so many people who are all in on Tesla stock, like it's their only investment.
Yeah. I mean, part of that is warranted. Part of it is a bit too much. The warranted part of it is that this is a company that is disrupting multiple multi-trillion-dollar industries at the same time. Okay. And the company is led. So the TAM is huge, and investors know that, retail investors and institutional investors know that. So the opportunity is huge, right? So that in of itself is an attraction. And then two, the company is led by a very charismatic person who has a proven track record and very outspoken. So that also attracts a lot of retail investors as well. And then the volatility is on top of that. So those are three reasons why I think some of the things that you mentioned played out the way they did. Now, you said compared to Apple, when Apple was disrupting the iPhone market, retail investors weren't as connected to each other as they are today. There was no X Spaces. There was no, um, you know, bunch of like there was no Robinhood that kind of was seen as like the retail participation, right? There was no government sending checks to people that they then started gambling in call options. Call options weren't as popular, um, so that's I think another layer of it. So all of these things that combined that leads to the situation where we are in today. So that I hope that answers your question.
It does, and that's why I think it's so easy to get into a certain echo chamber and get surrounded by a certain narrative, and that's the only thing that you hear, and forget even by accident that you get into that echo chamber. It seems to me that people are willfully wanting to be in an echo chamber and only want to hear one-sided news.
Yeah, yeah. But we can negate that. There are other ways to negate that. I welcome bulls and bears. I don't block anybody. Try to give everyone a fair chance at speaking. even if they curse me out. And like, for example, the guy that came in earlier, like literally every post I post, in his replies, he just cursing me out. And he still got the mic and got to ask questions and got to say his words, you know. And that we can also negate that kind of bias a little bit. We're talking about other stocks, like a portfolio of stocks, and focusing more about the research aspect of things as opposed to stock price action or call options and everything. So, it is, it is what it is. But all right. Anything else? Anything else?
What do you think about the bears, though? I mean, we've had plenty of bears come on here. Fred Lambert, Gordon Johnson.
Yeah, man, we have had a lot of people come through this space. Crazy.
So I don't see them coming on anymore, right? I haven't seen them. I would have thought, like, hey, maybe now they can actually present their argument a little bit more, or there's maybe more balanced people listening to it, which I thank everybody who's listening to it. And I hope you appreciate it, to hearing both sides of the argument. So to me, I actually used to like listening to them. I think some of them were off the top and would get very accusatory towards certain bulls, which I, would really get pissed off on. But I actually like to hear a different side from them. But it seems like as if they're not coming now, it almost makes me think were they also just presenting a case just for the clicks and the views and the follows?
Yeah, I don't know. Tech Greg.
Hey, Yaman. So I have a question. You've been announcing that you've been shorting Tesla since 330, $330, and it's now about 100 points, over 100 points against you. And you've claimed on Twitter, at least, or X, whatever, that you've been adding to that short as you're going. So it seems that you feel the stock should trade at 200 based on value, and a lot of your analytics are very sound and it makes sense. But you're going against the psychology of the market. How far against the psychology will you fight until you give in the towel and decide that it's not worth fighting the sentiment that now you might be wrong overall that it belongs there, but if the market doesn't agree with you, they're more powerful. So I'm curious as to how you decide when you cover a short.
Yeah. Great question. But a question that you probably won't get the answer to, unfortunately. And I think there's different ways of shorting stocks, and I'm aware of the risks, and I position myself accordingly. So look, I'm not an idiot.
No, I don't. I'm not suggesting that at all. But it seems like some of what you're saying on Twitter, I don't know, it seems like you're getting reaction from it. But if you were really short that, I owned a branch off of a day trading firm, and I saw trading, and I saw all kinds of traders. I saw more traders blow themselves up trying to beat the market. And believe me, I don't want to see anybody get hurt, whether I agree with you or not. I'm not into that. But it seems concerning. I'm seeing patterns I've seen in the past where people end up getting very hurt. That's why I ask.
Well, that's part of the game. If you don't want risk, stay at home.
Yeah, I guess so. But you just got to be, you got to hedge that risk a little bit. That's all.
Well, I have a portfolio of shorts, and like even on a day like this, it's not doing too badly. So
Yeah, sir. Maybe your other
it's part of
shorts
a
are,
portfolio. It's part of a portfolio.
maybe your
You've
other shorts are
actually
making up for it.
you've actually diversified your shorts pretty well recently.
Well, there's still some concentrated risk. I still need to diversify away a little bit, but yeah, I mean, I am in a bunch of industries, but I have plan B, plan C, plan D, whatever, and we'll see. XAI.
Yeah, thanks for that. My experience with psychology trading, and I've had my share, is about the time you just can't bear to take any more losses is when the market turns in your favor. And a lot of the time you end up selling and missing out on it. That's what's happened to me. I'm not saying you, but that's what happens to me. So about the time that wherever that pain point is, it's not just you, it's everyone else is feeling it, and then it turns. So that's been my experience.
Yeah. All right. Tesla will triple.
Hey, thanks, Simon. Is there anything that you're long or that you're bullish on right now other than your short
No.
positions?
I'm just short. There's no longs. I'm looking for longs. Do you have any ideas?
No, the market is just way overvalued now, so you're probably right.
I mean, it can get more overvalued. Like, I'm not saying, but you know, like I have also, yeah. I mean, exactly. Let's see. All right. Any other questions, comments, concerns, grudges? I don't see any hands. In that case, thank you very much, everybody. Enjoy your weekends. I'm gonna do some more research. Maybe do a watch party sometime. Actually, hold on. We have one more. We have a couple of hands. Give me 1 second. Tesla triple. Go ahead.
Are you planning on doing any of the macro spaces again ever?
I don't know. We'll see. Neil.
Hey, so I was just having some random thoughts when you were talking about being just short in general and the irrational exuberance of the market that we're dealing with. But let me propose this scenario just to get your reaction, Yaman. But what if we printed so much money in the past 5 years, trillions of dollars, right? And eventually that money ends up in the assets of the 1% regardless, right? It eventually filters itself through companies and consumption into the assets of the top 1%, which is the US stock market, bonds, this, that. What if assets are just irrationally inflating right now because all of the money we printed has nowhere else to go?
Yeah, I mean, there's a lot of other scenarios for sure. There's a lot of money tied up, trillions of dollars of money tied up in money market funds. But to say like money will go from money market funds to Tesla stock is a bit of a stretch. Like it is I mean, ACDC will tell you this. More like a place that would go to is 1 year, 2 year treasury bonds, and then maybe out in the longer term, out in the duration. But still probably stick with the bond market and flow into companies in terms of lower cost of debt and whatever. But there's a lot of other things. Like I said, macroeconomics is very difficult to in based on one thing. So like you're talking about one thing, but there's a lot of other considerations as well. So Tesla will triple just asked about macro spaces. The thing is like there wasn't much demand. Macroeconomics isn't as sexy as talking about stocks. And when I published a macro article, just a handful of people would read it. I can't see who's reading whatever. So and also in those spaces, I wasn't learning anything. Like it was the primary purpose of these spaces is that I have a better understanding of Tesla, other companies, investing, finance, economics, etc. And if there's nobody kind of arguing the other side intelligently on the other side of the debate, then what's the purpose of the space? I never know who's going to come into the space. I never schedule anybody. I don't know who the listeners are going to be, but who speakers are going to be. So I kind of try to gear it towards the speaker's strengths. But in the macro spaces, there was nobody. So what I do instead is I go into other people's macro spaces, and whenever I have a question, I just go up to speaker board and ask the question under the macro analyst account, and have a bit of an exchange. I have less control over the topics in those spaces, but at least it's a better use of my time. Hosting spaces is a lot of time. Like it's a lot of work, a lot of time, and it doesn't pay. So, Joey,
Sorry, I was washing my hands. How's it going?
good.
You watching the Tesla chart?
Tick by tick, baby. Let's go. Did you have a question?
Well, I saw that you tweeted that you shorted Lemonade, which I told you I owned about 2 weeks ago, so that's fun.
Oh yeah. It's a very small position, but so this is supposed to be an insurance company that is supposedly using AI and everything. But why do you think they're? Just one second, Joey. Neil.
Okay, I'm sorry. This might be a little bit of a transition, but I was just thinking about how irrational the market is, Yamanin. One metric that is very divisive and hot right now is PE, right? And you've got some of these stocks that price to earnings. Does any of this make sense? Does that metric matter anymore? There's a lot of people that in this bull market argue, oh, PE is an old man's metric. Don't worry about that. Do you have any opinions on that?
PE ratio is a shortcut for DCF. So most of the time, it's a good. Like most of the time, it's like applicable, but in stocks like Tesla, it's less applicable. And but in a recession, it becomes more applicable. So, go ahead.
Yeah, I was just going to say it's just wild because I've held Palantir for a long time, and their PE is hundreds, plural. It's pretty wild, right? When you think about how optimistic that is, I guess, from an actual cash perspective, but less
Yeah.
cash doesn't matter anymore.
All right. Lemonade, Joey. Insurance company. Company offers renters, homeowners, car insurance, pet insurance, term life, etc. Based in New York, approximately 1.9 million customers. Founded in April 2015, so just a decade long history. Seed money from Square. Okay. Series B was led by General Catalyst, participation of Thrive, Tusk, and GV, formerly Google Ventures. Joey, do you have limited insurance?
Yeah, I have Lemonade renters insurance, and the Google Ventures connection is interesting because their CEO is a former Googler.
Okay. How do you compare the product versus other insurance companies?
Well, the renters insurance, which the majority of the revenue still comes from, is nice because it's just like automated. You download the app on your phone, you subscribe for like $6 a month, and then they like communicate to your apartment complex and stuff.
Okay, why did you choose to go with Lemonade versus others?
It's the easiest option.
Okay. Why didn't you choose them for car insurance?
Because I have Tesla insurance. Brand loyalty there.
Okay, interesting. And so you're a renter. Did you look into Lemonade do you have any other type of insurance?
So Lemonade insurance, car insurance isn't in California yet. So I actually will switch my other vehicle that isn't a Tesla to Lemonade insurance as soon as they offer it in California.
Okay. What about life insurance? Have you looked into that?
Yeah, I looked into life insurance a little bit, but I never been convinced to do it.
Would you mind sharing what percent of your portfolio is in Lemonade?
A rough basis, I don't. I guess don't quote me on this, but it's around like 2 to 5%.
Okay, so it's pretty small.
Yeah.
Can you name their revenue and net income?
Their revenue is about like 500, 600 million annually. Their last quarter was about 150 million, I believe. And so that's what I follow is when I first bought shares when it went public, it was about 100 million annually. And obviously they kind of stagnated on growth during 2022, 2023 as a lot of growth companies did.
Okay. And their year-over-year, what about net income?
I don't invest in it for net income. It's at a loss, and I thought if the downturn lasted too long, I thought there was a chance they would go bankrupt.
Okay. Now, the revenue growth rate has declined quite a bit, 16, 17, 18% in the last 2 quarters year over year versus the prior year quarter. And net income is still negative in the tens of millions of dollars range per quarter. So despite the fact you mentioned revenue has increased from 100 million to 500 million per year, the net income has not turned positive. Why do you think that will change in the future?
Yeah, as they continue to scale, I wouldn't be surprised if they have to raise again at some point. But that's the play, is that it becomes a $5-10 billion plus company, and
But
they end up.
the question specifically, and you know accounting, right? You know what I'm talking about.
Yeah.
So if the prior 5x increase in revenue has now led to operating leverage reflected in the bottom line, why will that change in the future? Why is further scaling is the answer?
Because they're you can look this up, but their renters insurance business is profitable. They're using that money to expand into other businesses with their loss ratios. Like, the loss ratios are good on renters, it's not good on car and the others that they're expanding to.
Okay. Now, before I go to Neil, who has his hands up, I'm also going to say that part of the reason why I kind of stuck a small, very small short position in Lemonade is because I know a couple of the other investors on the other side, and they're just not really good at it. Neil?
Yeah, just wanted to ask if anyone has direct experience with claims with Lemonade. I'm wondering what they're covering, how they're gonna secure customers long term, because eventually, it's great to have a low rate, but the rubber meets the road when you have to file a claim and figure out if you're still covered. So just wondering if there's any sentiment on how Lemonade handles claims.
Joey?
I haven't had a claim.
Okay. All right. Neil, have you heard anything?
No, just wondering. Just very interested because I've got some my personal insurance is a very old long-term insurance company, and if you don't file claims, everything's great. You file a claim, hell starts. Now, it depends on how much money you've paid the company over time. If it's a good insurance company, they'll consider your previous investment versus what you've done. But I don't know. Insurance is an interesting business.
Definitely. Okay. ACDC, what do you think about Lemonade?
Honestly, I haven't really looked at it. It's not one of the stocks on my radar, but I mean, it just doesn't really sound great that if they have to leverage their margins from the renters insurance side to get into the other products, because I mean, renters insurance is definitely a higher margin business for them. And I would actually like to ask Joey that if he compared other premiums or if he just got it because it's of the ease of use that you can just open up an app and just apply for it and get it right there.
So I didn't do like as many, like, there was a time where I would do like car insurance. I would get like 4 different quotes, but I did have a previous rent insurer that I switched from, I believe, and I more so just wanted a cheaper rate and a more digitally native company. I don't even remember who it was, actually. They're one of the legacies that advertise all the time.
Neil?
Yeah, just want to give a perspective on insurance. There's compliance versus purpose. You can buy insurance to comply with something, or you can buy insurance because you actually might have to use it, right? So those are some things to consider. The older you get, the more you start to realize this, the different insurances we pay for. There's dozens of them in life, and some of them are compliance insurances where we just need to pay that bill to qualify for something, or there's purpose insurances where, hey, I really have to rely on this. If you really have to rely on that insurance, you need to dig deep. You need to understand what you're paying for.
Okay, great. Neil, do you have a position in the company?
No, I thought about it. I looked into the insurance industry and it was just so lobbied and regulated, and I just didn't want to deal with it.
Yeah.
It needs to be disrupted before I'll invest.
I think Tesla will probably do that at some point when FSD is really, really good, but not anytime soon. All right, 15 minutes to go. I'm going to read this Carvana Q3 letter, if you guys don't mind. Any other questions, comments on Tesla or anything else we've discussed? Macro, Carvana, Lemonade. All right. Carvana, third quarter was an exceptional quarter for Carvana. We had a record performance in virtually every key measure. Net income in the third quarter was $148 million, leading to a net income margin of 4%. Operating income was $337 million. Adjusted EBITDA was $429 million. Translates to 11.7% adjusted EBITDA margin. There you go, ACDC. They have some adjusted EBITDA. And these profitable records have to be viewed in a very important context. They were achieved while growing at 34% year-over-year by a company that currently has 1% market share. The machine we have built is fundamentally differentiated and results in an opportunity with few precedents. Most importantly, our customer experiences, financial performance, and a pace of growth continue to separate us further from the pack of our industry. Today, we're most profitable and fastest growing automotive retailer, and there's still so much more to do. While we're extremely proud of the exceptional experiences we deliver to our customers, we know they can be even better. We see the path and we know how to keep improving. While we're extremely proud of our financial performance, there are still significant opportunities for events, blah, blah, blah. We see the path, we see the light, God is with us. And while we're already the second largest automotive retailer in the country, we are still only a small friction, okay? As we discussed in the past, we believe there are three fundamental drivers of our growth. One, continuously improving our customer offering. Two, increasing awareness, understanding, and trust of our brand. Three, increasing inventory selection and other benefits of scale. Later in this letter, we'll discuss the ways we continue to integrate and benefit from our acquisition of ADESA. In our growth frame above, we believe ADESA is a clear, tangible, easily extrapolated example of growth drivers number 3. Increasing inventory selection, other benefits of scale. Okay. We hope you find this exciting as we do. The pieces are all in place. We are a team that knows how to build. We have a offering customers love. We have a uniquely profitable, highly scalable business model. Okay. Existing reconditioning infrastructure can support annual production capacity of over 1 million retail units, and our real estate footprint can support annual production capacity of over 3 million retail units. The future is bright. Okay. Retail units sold increased at 34%. In Q3, they have 108,000 units. So annualized, you're looking at about 400,000 or 500,000. Gross profit increased at 67%. Gross profit per unit was $7,400. Okay. Non-GAAP is very similar to that. Net income margin of 4%, a decrease from 26.7%. There's a footnote 1. Let's read that. Net income in Q3 2023, a year ago, we benefited from an $778 million gain on debt extinguishment as a result of our corporate debt exchange. Okay, fine. Net income total $148 million, footnote 2. Another one-time thing. All right. Outlook. Sequential increase in our year-over-year growth rate in retail units sold. Adjusted EBITDA significantly above the high end of our previously communicated range of $1 to $1.2 billion for the full year 2024. Okay. ACDC, any views on adjusted EBITDA metric?
In their perspective, no. I was just reading an interesting fact that they also increased their gross profit per unit from 2,400 that they were estimating it at, and it came in at, or actually, I'm sorry, yeah, it came in at 29,450.
Okay. Let's see. Production output at our inspection and reconditioning centers continue to increase in line with our production growth plans for the quarter. While inventory availability has improved throughout Q3, we still remain below our target available website inventory levels. Q3 GAAP and non-GAAP GPU of about $7,500 set company records supported by consistent performance across all components of GPU. GAAP and non-GAAP retail GPU was $3,500. Strength in retail GPU remains driven by fundamental gains in several areas, including non-vehicle cost of sales, primarily considered reconditioning and inbound transport costs, customer sourcing, inventory turn times, and revenues from fulfillment services. SG&A per retail sold were $4,300 GAAP, $3,700 non-GAAP, respectively, down about $1,000 on a year-over-year basis. Carvana operation expense totaled $1,700 per retail unit sold in Q3, a year-over-year decrease of $220, primarily driven by our operational efficiency initiatives. Overhead expense totaled $147 million in Q3, a year-over-year reduction of $388 per retail unit sold due to higher unit volume. Okay. Net income was $148 million. Net income margin was 4%. Q3 represents another example of our ability to achieve fluff. Unlocking long-term potential of Carvana and ADESA together. All right, so they highlighted this earlier as a benefits to scale type of acquisition. So let's see. 2.5 years ago, we completed the acquisition of ADESA. With the belief that combining Carvana's e-commerce model with ADESA's physical wholesale auction business would accelerate our path to becoming the largest and most profitable automotive retailer. As we deepen our integration with ADESA and realize these benefits, the power of this combination is apparent. The combination of Carvana and ADESA allows us to unlock positive feedback. What does that mean? Unlock positive feedback. Okay. Drive gains in unit economics and deepen vertical integration. Hold on one second. Okay, ADESA is the auction. All right. Unlock positive feedback, drive gains in unit economics, and deepen vertical integration. Over time, the continued integration will improve our customer experience for Carvana customers and enhance ADESA's offering to its commercial customers and strengthen our role in the automotive industry by adding complementary services and partnerships that are only enabled by vertical integration. Fine. Unlocking positive feedback. Throughout 2024, we have been focused on increasing inventory selection, a component of Growth Driver 3. To better match demand, not only by increasing production capacity at existing locations, but also by integrating Carvana IRC operations at ADESA locations. We have developed a repeatable playbook to enable these site integrations efficiently. Our integrations introduce Carvana inspection and reconditioning activities to ADESA sites while maintaining existing wholesale auction operations within a single location. These integrations generate positive feedback. Having more pools of inventory across the country increases selection for all Carvana customers, puts more cars closer to more customers, with reduces delivery times, results in better customer experiences, and drives more sales. These benefits should only increase as we complete additional ADESA integrations. Today, we have unlocked just 5 of the 56 ADESA locations and will soon introduce our 6th. As shown below, there remains a significant runway for future growth within our existing footprint. Right. They're doing 2 a quarter, looks like. Integrated ADESA sites, inspection center, ADESA site, there's some graphs. Unlocking gains in unit economics. Broadening our footprint benefits Carvana and our customers by reducing inbound and outbound transit distances and costs, as well as by enabling faster delivery times. These benefits in turn drive additional customer purchases, resulting in further economic benefits throughout our cost structure. We believe integrating more Odessa sites will continue to accelerate these, as well as other key sources of positive feedback in our model. Interesting. We continue to deepen and improve relationships with commercial partners who can leverage our technology and logistics network to sell more vehicles more efficiently. Okay. Management objectives, long-term financial goals, they have it out. Long-term gross profit target about 20%. Advertising 1 to 1.5. Let's see. SG&A 68. That's a hell of a goal. EBITDA margin of 8 to 13.5%. Okay. Net income loss margin 0. Interesting. Long-term goal. Interesting. There's 20 other pages. I'm not going to bug you guys with it. So I'm going to read through this over the weekend. It's been 2 hours, and we're going to continue with this Carvana discussion on Monday. Thank you very much, everybody, and I'll chat with you all next time. Take care.